Welcome to The Explainer. So today we're talking about a trader so legendary, people just call him BNF. This is a man who started with about $16,000 and turned it into over $150 million, all from his bedroom. But the wild part? His entire legend was pretty much forged in one single, totally chaotic moment. I mean, think about it. It sounds like a complete fantasy, right? One person hits the wrong key, a fat finger error, and boom, your life changes forever. It's the kind of thing you just daydream about. But for this one guy, it wasn't a dream. Nope. It was a multi-million-dollar reality created entirely by someone else's mistake. And get this, $17 million, that's not his total fortune. That's how much this trader, Takashi Kotegawa, made in a single day. One trade, $17 million. And it all kicked off because of one massive blunder that sent an entire stock exchange into a complete panic. Okay, so to really understand the legend of BNF, you have to start right here with the single most famous trade of his entire career, the JCOM trade. Honestly, it's a masterclass in staying calm when the rest of the world is absolutely losing its mind. So, picture this. It's December 8th, 2005. On the Tokyo Stock Exchange. The energy is electric. A new tech company, JCOM, is having its IPO. You know the vibe. Traders are hyped up, looking for the next big score. But literally minutes after that opening bell rings, something goes horribly, horribly wrong. And it all came down to a catastrophic typo. I mean, you can't make this stuff up. A trader was supposed to sell one single share for 610,000 yen. Instead, he accidentally listed 610,000 shares for just 1 yen each. The system just freaked out. The market gets flooded with these phantom shares for basically nothing, and the stock price just nosedives. Absolute chaos. But in the middle of all that panic, one guy saw the opportunity of a lifetime, and he pounced, buying up 7,100 shares at the absolute bottom. So who was this guy? Who was the calm eye in the middle of this financial hurricane? And more importantly, how in the world was he so prepared for something so random? Well, this was no accident. It wasn't just dumb luck. It was the result of years of, well, obsessive preparation. To figure out how anyone could be ready for a moment like this, we gotta go back. Way back. All right, let's rewind the tape. Long before anybody called him the JCOM man, we have to look at the super unlikely beginnings of Takashi Kotegawa. So here he is, and he is not what you'd expect. No fancy finance degree, no rich family backing him, just a regular college student reportedly living on instant noodles with pretty much zero formal financial education. You know, about as far from a Wall Street hotshot as you can possibly get. So his journey starts around 1998. He sees a TV show about this legendary speculator, Victor Niederhofer, and something just clicks. For the next 2 years, he works part-time jobs, scraping together every yen he can. But here's the key. He spends all his free time just obsessively studying stock charts. For 2 full years without making a single trade. Pure study. Finally, in 2000, he saved up about 16 grand, and he dives headfirst into one of the worst markets imaginable. The dot-com crash. Talk about trial by fire. So while pretty much everyone else was panicking, BNF saw a pattern. His theory was pretty simple. In a fearful market, people overreact. They oversell. So he developed his own contrarian strategy. He'd look for stocks that had dropped way, way too far, way too fast, specifically any that had deviated about 20 to 35% below their recent average price. He would buy into that fear, betting on a quick, temporary bounce back. It was simple, totally self-taught, and honestly, brilliant. Okay, but here's the thing. A scary market doesn't last forever. When the whole world went on a massive bull run, BNF's strategy suddenly became kind of useless. He actually got pretty stressed out about it. If he was going to survive, he had to evolve. He had to learn how to trade in a completely different environment. And this is what's so fascinating. It shows just how adaptable he was. In a bear market, his move was to buy those oversold stocks and profit from all the fear. But in a bull market, he totally flipped the script. He started hunting for laggards, strong, solid companies that were just late to the party. He'd buy them up and just ride the wave as they finally caught up to the rest of the market. So it seemed like he'd mastered both sides of the coin, fear and greed. But then 2008 happened. the global financial crisis. This wasn't just a bear market. This was a complete financial storm, and it was a test that was going to push his discipline and his bank account to the absolute limit. And at first, he actually made a huge mistake. He broke his own rule: stick to what you know. He put $6.5 million into Lehman Brothers, a US bank he hadn't really studied. And overnight, poof, it all went to zero. A super painful lesson. But here's the key. He didn't panic. He went right back to what he knew best, the Japanese market. He trusted his system, bought heavily into the crashing Nikkei index, and made a cool $12 million on the rebound. He learned from a catastrophic loss and immediately pulled off one of his greatest trades. So you gotta ask, how did he do it? How did he maintain that kind of iron-willed discipline? Well, it wasn't about some fancy software or a secret formula. Nope, it was all in his head. It was all about his mindset. This quote from him really says it all. For me, a $100,000 loss can feel better than a $6K gain if the losing deal was good and the winning deal was bad. You see what he's saying? It wasn't about the money itself. It was about playing the game perfectly. A well-executed trade that happened to lose was better than a sloppy, lucky win. Why? Because discipline is repeatable. Luck? Well, luck always runs out. His entire method was built on this simple psychological framework. He treated trading like a video game to stay detached. He ignored all the noise, news, hype, fundamentals, and focused only on the charts. He cut his losses instantly, without hesitation, and he never let the money change his life. To him, it was just the score in the game. The key was to trust his own data above all else. And he truly lived by that code. I mean, even after making over $150 million, his lifestyle barely changed. He was still in a small apartment, still eating cup ramen. The only big purchases he made were strategic investments like a building. Just another move in the game, not a luxury for himself. It's just wild. So, okay, it's an incredible story. But what can we learn from it today? Well, it turns out the principles that made BNF a legend are more relevant than ever, especially in today's volatile markets. Just think about it. The crypto market is famous for its extreme volatility, its flash crashes, and its weird liquidity glitches, right? It's an environment where these kinds of mistakes happen all the time, creating the exact same kinds of opportunities that BNF was so prepared to seize. And these aren't just theoretical. They are real, recent examples. In 2021, Bitcoin flash crashed almost 90% on Binance US for just a few moments. A Bored Ape NFT worth $300,000 was accidentally sold for $3,000 because of a typo. Or how about $90,000 worth of ETH being sold for $9,000 because of a misplaced decimal? These JCOM moments are still happening all the time. What BNF's story really teaches us is that fortune favors the prepared. He wasn't a gambler. He was a master of discipline who studied the game for years before he even placed a single bet. The next massive mistake, the next flash crash is inevitable. It's not a question of if it's coming, but when. The only question is, will you be prepared enough to see it?